What's going on, guys? My name is Richard, and welcome back to another stock market outlook video. As always, we'll talk about the price action of the major indexes, the NASDAQ, Russell 2000, and S&P 500, and we'll also cover how the true market leaders performed last week, as well as my previous watch list, and we'll also discuss some sentiment indicators, such as my surveys that I put out, the put call ratio, NAAIM exposure index, and finally, we'll wrap up the video by taking a look at the IBD Big Picture from Investors Business Daily, and also the GMI signal from wishingwellball.com. And then finally, at the end of the video, we'll put all that information together and determine what the current trend of the market is. And then based on that, you can decide how aggressive or defensive you want to be in the market next week. And to start things off, I do want to kind of go over kind of what I did last week and talk about the stocks I bought and sold and the reasons behind it. And if you enjoy my analysis at any time, please go ahead and leave a like down below. It really does help me out and my channel. And also subscribe if you want to see more videos just like this every single week. So diving right into what I bought and sold last week. These are the stocks that I traded, and I came in the week completely in cash. And overall, I tried some things this week and quickly moved my stops up to break even. And if it didn't work, I got stopped out for either a small loss or nothing at all. So overall, I started the week trading apps, pins, Tesla, and also Zoom. And let's start with Zoom. So first things first, on this Monday, we had a gap up open, which is always a little bit sketchy because it can often fade very quickly. So I want to be careful and wait a little bit longer until 10:15 before putting on any trades. So I started a small position, and overall I'm trading 1/3 positions at this time. I'm not going full position right off the bat because we are under some pressure in terms of this uptrend. So I'm taking a 1/3 position, and I bought it around here on the green dot setup. And overall, things were going well. I kept it going into Tuesday, and I moved up my stop to break even after this upside reversal on that day. And then I was stopped out for a small loss on Thursday. And you can see that the stock actually recovered very nicely and finished the week out very strongly on higher volume. So overall, I'll be looking for an entry into this. You can see that if it challenges this pivot right here, I'll probably put some on once more. But this could go sideways for a few weeks, fall back to the 21 EMA, and that would be completely normal. So next up, I also traded Tesla, and I started my position on this Monday on this green dot setup, and then I added when it broke through this pivot right here. So overall, I had a pretty good entry, and I really like how it closed right near the top of the trading range, and then had a nice follow-on day on higher volume the next day. But then you can see that it had just a normal inside day, so nothing to be worried about, and I actually moved up my stop to right about 409, 410, and I got stopped out on this day. So I think I was a little bit too conservative here, and I think it was a mistake. I should have had my stops at break even, which would be around here, or trailing at the 21 EMA. I think that would have been a better way to go for this, and I was probably being too conservative at this point. And overall, I think that this is still one of the leading stocks in the market, and I'll be looking to get back in potentially when it breaks above this pivot right here at 461.94. So that's Tesla, and I also traded pins in a similar manner, bought on the green dot, added as it broke through the pivot as it was coming up from this reversal right here, and I was stopped out for, I think, just basically break even on Thursday as well. And just like Tesla and Zoom, this stock is holding up excellently during this small correction, so I'll be looking to get back in as it breaks through obvious pivots and eventually into new all-time highs. Then I also traded apps, and once again, I think I did make a mistake here. I bought it really well. I bought it first when it broke this downward trend line, and then added as it broke above this pivot right here. And I had a nice gain going into here, but then I set my stop below the close of this day right here because I wanted to give it a lot of room. But you can see that stopped me out because it had a really ugly reversal, but then finished beautifully right near the top of the trading range, right under the green line. So I think here what I should have done is left the majority of my stops at break even, and then potentially just had kind of my add-on buys be stopped out here because this is acting really well. It's showing a ton of relative strength versus the market. So I think from this trade, a good takeaway is to not put all your stops at once, especially if you have a decent profit going in, and potentially also to take some off once you have about a 20% gain, because just in a day and a half, I had made a decent profit on this. And if I'd taken some off, I could have had more kind of profit cushion to hold the rest for a larger move potentially. So I think this is a good learning experience, and each trade I try to take something away to apply it and improve my trading, and I definitely learned a lot from this one. So next up, we've got AMD, and I first traded this on the undercut of this low, this relevant low right here, and then the retake of the 50-day moving average along with the green dots. So I bought it right below the 50-day moving average and added as it moved through it. And I like how it closed right near the top of the trading range, but I did get stopped out for break even on this day. But I did another trade of this as it undercut this low and moved back through it. And I had about a 0.78% risk for that. So it was a really good risk reward ratio. But the stock closed right here. So I took it off at the close because it wasn't worth the overnight risk. Overall, this stock is still building its base. I wanted to see a definitive move up above the 50-day moving average. And if I had saw that, I would have kept this on going into the weekend. So that's AMD. And I do not have any of this at this time. And my only remaining position right now is LVGO. It took out these lows right here, and I bought it as it went through the 50-day moving average and also had a green dot set up. And I really like how it closed at the top of the trading range and above these highs right here. And on this Thursday, this stock was really standing out along with Tesla and Zoom. It was acting very, very well. And also on this day, it was holding up really well as well. And I added a bit, I think, at the close of this day, and I still have about a 2/3 position in this at this time. And overall, I think this is one of the strongest stocks right now, and hopefully it can keep moving up and challenge this kind of double bottom pivot right here. And if it does, I'll add as it breaks through this pivot, and eventually into new all-time highs. But overall, I've got my kind of core position set here. I'll keep an eye on this, and this is my only position at this time. I'm mostly in cash, and overall my stop's at break even. So this is kind of a no risk trade, which is always what you want to have, especially when the market is under pressure. So that's kind of how I was trading last week, and I hope that kind of helps you out. If you have any thoughts or feedback, let me know in the comment section below. And overall, taking a look at the QQQ, let's go day by day and talk about the overall market action. So overall, it was rebounding well early in the week. You can see on this Monday, we had a gap up day and a nice tight trading action. And then it kind of got rejected at the 21 EMA. You can see it tried to move through it, moved down, recovered towards the end of the day. But on this day, it gapped up and closed right near the lows for a really negative day. And on Thursday, we gapped down, tried to move up through the 50-day moving average, but now that's potentially resistance. And then we moved back down to the 269 level, which is the highs of this day. And I talked about this in the previous video, and that could be acting as potential support. But then on Friday, we really cut through that. We gapped up, moved all the way down, and did recover somewhat off the lows. But overall, the daily trading range on Friday was 44.8%, and the weekly closing range was only 23.8%. So from this last bar, the expectation is we go sideways or potentially lower. And I don't like seeing that we close below the 269 level. But if we do turn on the 65 EMA, you'll see that we did undercut and retake that. So that is potentially support, so keep an eye on that. But if we lose that, I think we could be going lower, potentially to around this level right here, which lines up with the highs of this kind of consolidation period. So that's the NASDAQ day by day, and taking a look at the weekly chart, and let's actually go to this page right here. You can see that overall we were down 1.32% on the week, and from the expectation of this bar, we either go sideways or lower. I don't like seeing these high volume down days, especially because they're the highest since the March crash. And going back to the daily for just a second, you can see that the up days are in much lower volume than the down days, which is something that you don't want to see, especially during a correction. That could mean that we're in for some more choppiness. So that's the QQQ, and moving on, we've also got the SPY, and overall it mimics the action of the NASDAQ. And going to a weekly chart, you can see that overall we're down 1.02%, a weekly closing range of only 17.8%, a daily closing range on Friday of 35.6%, and the expectation from this bar is we go sideways or down. And taking a look at the IWM, you can see that it fared much better than the other two indexes. It was actually up on the week, up 2.78%, with a weekly closing range of 45.1% and a daily closing range of 51.8%. So you might want to look for stocks within this index because it is faring a lot better. than the NASDAQ and also the overall market, the S&P 500. And the expectation from this bar is we go sideways or up. And moving on, let's take a look at the secondary market indexes. We've got the Dow Jones, and overall it was also down on the week, but you can see it's finding support at the 10-week moving average. And you can see that was down only 0.21% with a weekly closing range of 18.5% and a daily closing range of 37.8%. And quickly talking about stage analysis, you can see it's in a stage 1 because it is above a declining 30-week moving average. And on the QQQ, you can see that it is still in a stage 2 uptrend because it's above a rising 30-week moving average, which is this red line right here. The IWM is also in a stage 1. It's above a declining 30-week. And the S&P 500 is also in a stage 1 because it's above a declining 30-week moving average. So with that covered, let's move on to the FFTY, the Innovator IBD 50 ETF. And overall, you can see that this is one reason to be a little bit bullish because overall growth stocks actually acted reasonably well last week. We were up 0.39% on this index with a weekly closing range of 29.6% and a daily closing range on Friday of 58.2%. So from this bar, the expectation is sideways or lower. And moving on, we've got the XLF, the financials, and overall we were down 0.12% with a weekly closing range of 14.5% and a daily closing range of 16.7%. And the expectation is we go sideways or lower. And lastly, or not lastly, we've got GLD. And overall, you can see it was up 0.41%. It's in this nice bull flag right at the 10-week moving average. And the weekly closing range was 48.7% and a daily closing range of 38.6%. And lastly, we've got the VIX. And overall, we were down on the week, down 3.87%. And you want to see this try to challenge these lows right here. That would be promising for trend followers. So those are the major indexes. And overall, the main takeaway is that there's no clear uptrend as of yet, and likely will be going sideways or just kind of choppy up and down. So moving on, we've got the true market leaders, and you might notice that I've updated my list somewhat. And if there's any stock that you think I should add to this list that you don't see here, just let me know down below in the comment section and make sure it kind of fits that CANSLIM potential true market leader mold. But overall, going through, we had some great performances. You can see WKHS is continuing to trend higher from this breakout from this flat base. Zoom is acting well. Peloton, Tesla are all moving up. And this is one reason to be bullish in this market at this time because the leaders are acting decently. And a lot of them have formed this pattern here where you've got an intermediate low and then a higher low. So keep an eye on that, especially because the QQQ is making lower lows. You want to be focusing on stocks that are diverging from the market and outperforming. So focus on stocks like Zoom, Peloton, Tesla, WKHS, which are acting better than the market. Those are the ones that are going to outperform once the uptrend resumes. And overall, going through the charts, you can see we already talked about WKHS, Zoom, Peloton, Tesla, DKNG is trending well. You've got LVGO retaking the 50-day moving average. And let me go to my main chart right here and go back to a daily chart. TDOC is trending with LVGO. HGMP is acting well and moving up despite the market weakness. CrowdStrike is holding its 21 EMA. EMPH retook that 50-day moving average. Fastly is still struggling a little bit, and it's below that 50-day moving average. So I want to see it retake it. But overall, it is tightening up nicely, which is good to see. Apps is trending higher, as we already covered. Pins is tightening up nicely, formed an intermediate pivot at this high right here at 37.9. Fiverr is staying right near all-time highs. SE above that 21 EMA. AMD is trying to get above that 50-day, but it could need a little bit more time. And lastly, we've got NVIDIA, which is still oscillating in between the 21 and 50-day moving average. And overall, as I said before, you want to be trying to find stocks like this that are holding up well with strong fundamentals despite the overall market weakness. And there are some stocks that were former leaders like Coop, which are now way below the 65 EMA. And I wouldn't be touching this. I think this needs time to build another base. It needs to form the right side of a cup and handle or flat base. And then once it moves up again and challenges those previous all-time highs, that's the potential buy point for that. So that covers the true market leaders. And now let's move on to how my previous watchers performed this past week. So let's sort by that weekly change. And going through, apps was our best performer. And you could have bought it off the break of the downward trend line or this pivot, or even the regular high tight flag pivot right here. And it is a potential green line breakout, so keep an eye on that. And on a weekly chart, it looks very, very strong. And moving on, we've got Tesla, which is acting well and overall was up 16% for the week. And I would look to rebuy it when it breaks above this pivot right here or eventually into new all-time highs above 502.49. Zoom, we already talked about, is hanging in there well above the 21 EMA and actually found support at the 10 EMA. So this moving average works very well for the stock. You can see it bounce right here and right here. NEO is building out a nice little shelf here. Pins is staying strong. CrowdStrike we already talked about. SC we talked about. It's tightening up on the right-hand side. Fiverr right near all-time highs. Moving on, we've got Neri, which trended down to the 50-day moving average on higher volume, although a lot of options were expiring, so keep that in mind. And lastly, we've got OTRK, which was our biggest loser on the week, down 12.27%. And it never really presented a buy point that we talked about breaking through these highs right here or a green dot. And overall, had a nice recovery on Friday, so keep that in mind. It might try to move back into the shelf. So overall, a very good week for the watch list. We had 3 over 10% gains, apps up 31%, and we had 70% of them make money as well. So make sure you guys tune in tomorrow when I'll be putting out my next weekly watch list. So with that covered, let's go over to Twitter and talk about the sentiment surveys that I put out. And overall, we actually increased bullishness last week, up about 2%, going from 37% to 39%, which is a negative. Hopefully, this starts to trend down once again. And taking a look at the psychological market indicators, you can see that the put-call ratio is trending in the right direction. And also the bulls versus bears is trending in the right direction. But it is not yet at these levels right here that we saw on the pullbacks in 2019. So keep that in mind. And also taking a look at the exposure index, you can see that we're still in the 50s, which is a good sign. So overall, in terms of sentiment indicators, there still is some room to move down before we really get a lot of fear back into this market. So with that covered, let's go over to the IBD Big Picture article. And overall, their headline is stocks fall for the third straight week, but there are a few reasons for optimism. And overall, they discuss how the NASDAQ and S&P 500 lost 1.1%, but did rebound late in the day. And overall, they talk about the added distribution days last week. Moving down, they discuss the big weights in the indexes, so Apple, Microsoft, Amazon, Alphabet, and Facebook, and how they're below their 50-day moving averages. So until these stocks really recover, it's going to be tough for the QQQ to really break out once again and move up and start a new uptrend. So keep that in mind and watch these stocks very carefully because they do combine for roughly 1/3 of the NASDAQ. And moving down, they discuss some reasons to be optimistic. They talk about how the NASDAQ closed in the upper 60% of Friday's intraday price range. They discuss some great stocks on the IBD 50 that are acting well, HCNP, Dollar General, PFSI. So you might want to add these stocks to your watch list. And overall, their view is that the current outlook is still an uptrend under pressure. We're not in correction just yet based on their methodology. And we now have 7 distribution days on the S&P 500 and 5 on the NASDAQ. So that is kind of the final word from IBD. And moving on, we've got a red GMI signal from wishingwellthball.com, and the GMI score is a 2 out of 6. And you can see that we're no longer in a clear red, white, blue uptrend on the QQQ. So overall, taking everything into account, my view is still the same as last week. I think we're in a sideways, choppy market. So if you're a swing trader like me, go in a little bit smaller and cut those losses short. And if you're a position trader, make sure you're hedging your longs with some SQQQ or another shorting method. That way you kind of reduce those fluctuations while keeping those core positions. So that's it for me. Thank you guys so much for watching. Make sure you guys check out my next weekly watch list, which I'll be posting tomorrow. And other than that, make sure you guys leave a like below on the video and subscribe if you're new. And I'll see you guys in future videos.